Hello and welcome, as today's date is that of the 18th of December 2018. My name is Derek. Welcome to the Money Charts channel. Let's talk crypto trading in this video, the third for today. First one was a crypto day morning, and I'm hoping I help maybe one or two people out with another sports video, or at least entertain a couple others. Let's talk now about EOS and all bets, trades of alike within one's own risk reward. The disclaimer at the start of every video. Start off with a few lines in here. Short term, this is a 4-hour time frame or intermediate term, depending on how you look at your time frames for what's short and long. This resistance level, of course, got above it. It didn't have a fast move breaking that level, not until it had a very good run of supporting this 18 average on this time frame, and off she's been going, and it's still no signs of this move coming to a stop, at least not as of yet. It will at some point, and then to what degree will be the next question there after that. But as I look at this, I want to talk about risk reward, because that's what I'm going through. Do I take a risky play? Because when I look at this on multiple time frames, it's going to be very interesting, to say the least. The move in itself to break this level of support, let's just see how. Yeah, we'll basically, there was a little bit of support here at 7, so maybe just for now put a line here. Go straight down, and then now it's been going straight up, consolidating here with the 18 to flatten it out for a bit, but just consistently going up. So one of my strategies I've been thinking about for a while, with a lot of these min holdings that I have, EOS being one of them, why not do an aggressive sell? Instead of selling 15 or 20% at a particular spot, sell 100%. And when you look at such, well, where would that be? For it's overextended now, is there a more better aggressive selling point? And if you want to do that, the answer is yes. It's going to go up another 15+% or so. That's the short answer. When we take a look at this on the weekly, this is the spot where this line that it broke through, it's coming up to this 18 average of highs, and there's the 83 hash area, previous key level as well. And it's going to work out to the same thing. You have point A low, which occurred in August of this year after the decent decline from the April Fool's high top. That decline was higher than the one that it did match in here. And in thinking of that, that could tell you that the odds that this could be a failed breakdown below is higher, because if I were to sell 100% of what I own right here, that means I'm counting on a pullback. But to what degree? If it pulls back and you buy in here, well, regardless of the fact, that would have been more profitable than anything else you could have done, either that of holding or making small trades here and there. If it goes down here and you buy, well, that's a tremendous gain that you'd be having, at least within the individual play of that one particular coin. I'm going to look further upon the Fibonacci, but I'm just going to take a quick look before we do at this key line, because we can see technical analysis doing what it does with the 18 average. It always seems to coincide the 18 lows with previous where it resisted, such the case here, and getting above. That's why I talk about these fast moves. Case in point within this one in here. And I'm just going to remove that line on this for now. I'm going to go back to the more longer term and talk about that, because it's either going to be a failed breakout, fast move higher, or a heavy chance of resistance. The low in here says 800. However, this is 7 decimals, so it's 8,000 Satoshi. The high, it's in at 200 44,000 when adding another decimal. Now, you don't know if this is the low just by looking at it. You can tell that this market came in, had a quick little rally, sold off, and then it just shot up really quickly. However, was this traded somewhere else before the fact? The answer is yes, because I've already calculated Fibonacci. A low of 8,150, which is 150 basis points higher than this low, and 243,860, which is pretty close to the 244 amongst such. I'm going to put up the EOS chart on another exchange, and that would be on the Bitfinex one. So there we have it. The market started off in June of last year with a very good opening rally. Now the rally, notice that the previous high was a matching hit after coming up a long ways. So it's support coming back down. We can say, well, it's head and shoulders type of stuff ever since. But the main thing about this is simple technical analysis, at least from my point of view. Point low, point A low, then the high, then the low, then this high in there. So extreme leg higher, to say the least, when you consider its X size move, and in that case we can give a number to X. This is 130, so 13 would make it 10. So yeah, we're looking at about a 14 or so X move. To do it in the amount of periods that it did it in, which was, we'll go a dozen and a half, to have just a little bit of small corrections along the way, which was this 2 red candles and another sideways one. Okay, that's really good. And then straight down, like 6-7 consecutive red candles down in a row, then consecutive green candles up, but decent leg higher on the next one. It was just a decent one, but considering it came from an enormous move, that was still really good. So then when it came back close to where it came from, piercing above, and this, I can tell you right now, is annoying as a trader, although your gains were just small, meaning, where are you going to buy? Oh, it pierced above previous low. So as this was coming down, you say, I want aggressive buy, when it was breaking down below the 100,000 number. Where would I said a good place would be? You know, somewhere around 55, 56, and then you can see what it pierced above. And well, all it made a move was to, but still good profits, was 62, going up to about into the 90s. And that's still about a 50% move. However, as I look at this, it's had its move. It needs time to correct and digest this. It's had that. It's definitely now had enough time with this decent move here, which is down, and this sideways correction with what has now been a little bit of further decline as well. So it has corrected very well. I don't want to move all my indicators. I haven't made that mistake in a while. And when we look at the Fibonacci on here, from the high and the low, what we get is, I'm going to look at the focus on the 76.4 number and the 61.8, which is about 109 and about the sixes. So we put 109 in here. Let's just put it right around in here and just go close enough. And then again at around 66, which is barely lower than where we are now. That'll definitely work in that area. Let me just scroll it back. So looking at this further, to me, this is the classic failed breakdown, fast move higher, because it's going to have weak to little resistance at the 18 highs, which is where it's supposed to in the 82 area. And thus you resist it, you come back down, maybe you'll have a fast move lower, maybe you'll congest for a period of time. When I say congest, that means it stays in like an area of like, well, we would be saying between 72 and like 52 for maybe a few months. And then, of course, go lower after that. Because if this is a successful resistance hit, I didn't mean to push that. I wanted to push my drawing tool so I can make a circle here. If it resists this, after it already found support on the 38.2% down level. And it didn't find support much at the 23.6, thus not a surprise it was a fast move to the next level. So it did what it was supposed to on its first shot after supporting this key fib level. And then it corrected through time after a modest price increase. And it's broken the move to the downside. Now, oftentimes, you might get a fake move before the real move, which thus would make sense for that failed breakdown. So to me, you either got the failed breakdown, fast move higher, or in time, it's going to make a move to a 61.8% down correction. That would represent 38.2 or 29,000, or basically a price point to be, if it's a failed, to be somewhere around here. So that's a decent sized decline. That's greater than 50% from the point in which it is at now. All right then, let's just make this it for the video because I think it's a good topic. Don't need to really go over too many other coins, but that is how I look at it, whether I'm going to make a play. Part of the risk reward as well is if I'm playing several dozen coins, if I take one or two of them and do such, and being such as selling everything because you'd be maybe selling here, and then if you even buy in here, it's an okay gain. I don't know what I would do. I would have to either decide to buy here near this previous low, or of course near that Fibonacci level that I talk about. If you do something like that and then the markets have a decent leg lower, that would help a little bit, of course, to the portfolio. Because most likely this would happen if the cryptos in harmony go down together. But if we are nearing a time where everything's just going to go straight up, and I sell here, and then you have the move above the 18, and then you get action like we've seen so many times before, similar to this in here, that's going to suck selling it at the 80-ish thousand mark when you're seeing it go to 150, 250, and maybe even to a million Satoshi and more. However, if that's because markets go up in harmony, my portfolio will have a bunch of other coins doing such as well, that by doing this with a few coins here and there probably would be more of the better plays. And I want to do this with coins that are on the minimum scale, that I'm not attached to coins as it is really. It's all a numbers game as far as I'm concerned, and codes are just reference points that you need in, I'm trying to think of what the word is for a database. So it's like a database code that you would have. So that's all I look at it for, what these like EOSs and all of these other coins as far as myself is concerned. But yeah, that's the plan on strategy. Whenever you see some significant size gains, short, like intermediate term and long term, and you're like, even intermediate term, this is okay, so I want to say sell it all here, which is at 78, and then try to buy it back at say 60. And then if that happens, then I would get a pretty good deal. 78, 60, that would be a differential of 18. So you're looking at like 20-ish, 30%. So that's the type of thinking that I have. And again, having like 60 or so different pairings, 70 different pairings, if you do that with 2 or 3 or 4 at a time, then that's not putting any real big risk, I think, as far as losing out on what I call short selling. Short selling is selling much lower than where it eventually goes shortly there after the fact. Thank you for tuning in and have yourself a great day. Bye-bye.